Hi everyone, it's Joe Veneri, the host of Fit Insider, the show where I talk with the entrepreneurs, executives, and investors who are redefining the business of fitness and wellness. Today I'm joined by Chloe Steinberg. Chloe is a partner at Sapphire Sport, a venture capital platform investing in companies powering the next generation of consumers. In this episode, we talk about Chloe's experience at Equinox, where she led Equinox Ventures. We discuss Gen Z's approach to wellness, including a broader shift towards living a healthier lifestyle. And Chloe shares her framework from separating fads from sustainable businesses in the health and fitness space. A quick reminder before we get into today's show. Every Tuesday, we send a weekly newsletter filled with insights and analysis on the business of fitness and wellness. Join other decision makers and industry operators by subscribing at insider.fit.co. Let's get into it. Hi, Chloe. Welcome to Fit Insider. Thanks for joining us.
Thanks for having me, Joe. Excited to be here.
Yeah, we were talking a little bit offline, kind of a long time coming. I very much look forward to this conversation. Think, you have a lot of unique insights to add to it. And maybe just to kick things off, can you introduce yourself and tell us a little bit about Sapphire Sport?
Absolutely. So I kick off every introduction saying I'm from Baltimore, Maryland. There's actually a shockingly large contingent of us in broader health and wellness from the Baltimore area, but huge part of who I am and sort of my approach to all things. I grew up in the broader world of tech investing and have spent a lot of time in consumer social, also spent 5 years running the venture arm and leading business development for the Equinox family of brands, which is, where I originally got to know you and Anthony and the broader team at Fit, and joined Sapphire Sport just this past February. I will say, and I always feel a bit silly talking about it, but I have a bit of an odd background, starting in enterprise software investing, then spending some operating time in health and fitness. And when I was thinking about where I wanted to call home as an investor, I really struggled to find a place where I felt like I was putting both areas of my domain expertise to work. And I'm truly just grateful to have found the opportunity at Sapphire. So high level, we are an early stage consumer tech fund, really focused on the next generation of consumers. I spend most of my time thinking about the under 34 demographic and how they're interacting with brands, consuming content, consuming health and fitness. I have to highlight, while sport is in our name, we are not sports tech investors. We're backed by entities of influence across global sport media and entertainment. And, I'm happy to talk more about that base later on this call. But those strategic LPs understand that tech is critical to how brands and consumers engage with one another. And they look to be their eyes and ears in Silicon Valley and bridge the gap between tech and culture. I think similar to the role I sat in at Equinox, the sports teams see smart mouth guards. They see smart fitness equipment. It's not to say they're not great businesses, but it's not why they back us. They back us to fill their blind spots and help them understand how the world is changing, the enabling technologies for the markets that are changing the world so they can get ahead.
Yeah, that makes a ton of sense. And it's something that I think I wanted to touch on later in the conversation, but it's a natural kind of evolution here. When you think about the term sports tech, and we hear a lot of like fitness tech, and now the different investors who are coming into these spaces and saying it is not one of these things individually, and it's a very broad term. And oftentimes we hear it at the intersection of culture, certainly technology, but also now media and commerce and all these other things. How do you define those different verticals and where do you draw the line in terms of, well, this does or doesn't fit our thesis, or is it, it's always evolving and we want to push into what's next? Like, how do you think about defining that?
I mean, we're a next gen consumer tech fund, right? It's a broader thesis. And, we can say that highlights consumer culture. We all define consumer culture in different ways. When I think about it, I'm thinking about where the under 34 demographic is spending their time, how they're consuming content, and the channels brands are going to have to work with to connect with that future consumer. For us, our LP base comes from media, sport, entertainment, lifestyle more broadly. So we're spending a lot of time in next gen media, gaming and broader gaming development technologies, health and human performance, truly because that's where my background comes from. But then, and the enabling technologies for those markets have a big piece as well. And the picks and shovels that are helping those brands connect with consumers. Wellness is a tricky word. And I think 5 years ago, wellness was an investable category. But now when you look at the next generation, wellness is kind of just an underpinning of their lifestyle. And it's so deeply rooted and connected in so many things that they do that I almost feel it does it a disservice by treating it as an investable category, if that makes sense.
Yeah, I think it does. We've kind of thought about it as some of these aspects of fitness or wellness, it's almost like a feature. It's just a subset that, especially when you look at some of the massive trillion-dollar tech companies that are pushing into that space, well, if they can come in and develop a fitness offering or a wellness offering, even now, like an at-home testing offering for all different types of health conditions, how can these early-stage companies continue to innovate such that they're differentiating themselves? And I think that does come back to what you're talking about, is like culture, distribution, media, awareness, those kind of points that they can get to that younger and younger consumer. To that point, you mentioned that younger consumer and focusing on where they spend their attention. How do you think about this group? Why is that so important to you? And how does it factor into the companies you're looking at?
I mean, I think the biggest thing about this group is they live a fundamentally different lifestyle. And I think particularly when it comes to health and well-being, I mean, the data doesn't lie there. You know, I'm publishing a blog in a couple of weeks, and today's young people are more health conscious than ever. Like, that is not a controversial statement. Millennials and Gen Z are 80% of gym goers, and I think almost 90% today of online or app-based workout users. And not to mention, I mean, I think everybody knows I'm pretty passionate about the mental health space, but I think it's 37% of Gen Z says they receive therapy, which is a pretty unbelievable statistic. And I almost think about it in the way my generation started going to the gym to take care of ourselves versus my parents' generation went to the gym to look good and because doctors said they should, right? And when I look at Generation Z and how they're thinking about 360-degree health and wellness, particularly when it comes to their minds, they're doing CBT, they're doing breathing exercises, they're meditating, they're receiving therapy to protect themselves for the long haul, not because they feel something is inherently wrong. And I think that's a really, really focused distinction between Generation Z and millennials. They are so proactive about the ultimate pursuit of happiness and balancing all facets of their life to create a whole, happy, healthy individual. It's not health and fitness. It's truly this 360-degree picture of having a happy life, a long and happy life.
Yeah, that's certainly true. You know, I think about, you mentioned the different generations and maybe what our parents did. It's like even my parents and certainly grandparents, the fact that I played sports in high school and college and took training and conditioning very seriously was totally blew their mind that I even would do that for sports, let alone after that, continuing to do that as like a lifestyle choice. And now it's basically just a part of life that it's almost that mind-blowing when somebody doesn't do it, especially among younger generations.
Yeah.
And a distinction, I'm curious, you know, I don't know how you think about it. I'm still in the process of figuring it out for myself because I look at, you know, younger generations on platforms like TikTok and think, you know, when they're using breathwork, for example, a portfolio company of yours, are they even thinking like, I'm doing this for my mental health? I'm doing this for my breathwork practice? Or are they just thinking, this makes me feel better, and they're not too worried about figuring out how this fits into a definition of health or fitness or wellness? Have you thought about that at all? Or, you know, can you help me make sense of that?
I kind of view it as I'm just taking care of myself, right? This stuff is becoming mainstream, and it's just something we do to support that broader definition of happiness. I mean, I was joking with my partners the other day that every time before we have a team meeting, I take a breath on breath work. And it's just like something I do now as part of my daily routine. But I think you bring up a key point, right? There is a difference when we look at investing, and particularly like the wellness sector, between temporary trends and secular shifts. And I think that's kind of what you're alluding to, right? Trend chasing is really prevalent in wellness among both consumers and investors. And there's certain practices in mindfulness and in fitness that are trendy. They're of the moment. We're talking about them because they're relevant and they're cool. But then there's these secular shifts, which are going to exist for the long term and are really allowing categories to emerge that are just becoming part of people's daily routines and daily life. And I think when I look at the category as an investor, that's where I want to invest behind. And we want to predict the cultural shifts that are going to be here for the long haul with, you know, winners will be efficacious. They'll be convenient. They'll highly engage consumers 2, 3, 4, 5, 6 times a week instead of, you know, once a month.
Yeah, I think that's very interesting in terms of, you know, how do we separate fads and trend chasing from like legitimate sustainable businesses? And certainly to some extent, every industry has that problem, but certainly with health and wellness and fitness, it's kind of plagued with this overhyped, next thing coming. How do you deal with that? There's the one, I think you've done a great job with it and just kind of stating when things maybe are overhyped, and you're not afraid to say that. But how do you deal with that to the founder? How do you deal with that in the broader category? Is that something you're messaging to them, saying like, hey, we can't get behind this because I'm just not sure it is efficacious? Or are you just passing, kind of, moving on, keeping that in your mind? How do you, I guess, put that out there into the broader ecosystem that, some of these things are overhyped and kind of BS?
I hope that any founder who has ever spoken to me will acknowledge, like, I'm so authentic in my approach and I would never pass without full clarity on why I've done so. It's up to us to help build better companies. And by keeping that to ourselves, I don't really think we're bettering anybody. I mean, there's 3 pillars, and any founder who's spoken to me will have heard me say these before. The first is clinical validity. This was ingrained in my brain at Equinox, right? Where is the research coming from? Where are your clinical studies? Are you investing in these things? Frankly, like, does your product work? Because if it doesn't, a consumer will try anything. I will buy anything that is targeted to me on Instagram. If it doesn't work, I'm not going to repeat purchase. And right, that's how you create a sustainable company in the long term. So that's the first. And, I think I'm in a beautiful position at Sapphire. It's hard for wellness investors to diligence clinical validity. When we have an LP base of sports team owners, lifestyle brands with human performance coaches, with experts on their rosters, it's a phenomenal source that makes us smarter and helps truly diligence the efficacy of the products and services we look to invest in. The second is efficiency. I'm a believer that time is our biggest asset. And in order to make our lives as full as possible, things have to make our lives more efficient. And even if a product is the greatest thing in the world, if it's too hard, something else will win out. And the third I talk about a lot is this idea of habits. And is it good enough to stick? And again, a lot of these learnings for me from Equinox, and one of the most amazing membership-based businesses ever built. But this idea that this is the difference between a short-term fad and a company of consequence, right? You can have a very small population of users that uses your product 5 days a week and build $1 billion business. Right? You don't have to have hundreds of millions of users. And I would rather see small, incredibly loyal populations showing that something has become ingrained in their daily life than a super large base of users who are engaging far less frequently.
Yeah, it definitely makes sense. And thinking about all those things, you mentioned, Equinox a couple of times now. I'm curious, thinking about that experience, it's obviously a little bit different given that it's like kind of a corporate strategic, and you were also working on, like, it sounds like a variety of different kind of like new business and incubating projects, and Equinox has a ton of stuff going on. How did that experience kind of shape what you're doing now? And then how is it different, I guess, for someone who doesn't quite understand the difference between how that would be structured, right? Obviously, you're doing this at Equinox kind of in-house and as part of this broader vision. And now at Sapphire Sport, more venture focused, also with kind of different mandates and opportunities. How did that inform it? And then how are those things different?
Sure. I think the biggest thing I learned is that founders, particularly in the wellness category, seem to be seeking something that I didn't see elsewhere in the VC landscape, which was a partner that really had authority in the sector and their ability to validate their product's efficacy to the market and or support distribution. And as I looked at the VC landscape, every firm should have a bench of operating advisors now. We should have talent teams. We should be able to make portfolio introductions. But this idea that we could forge deep connections to the key players and distribution channels who are really going to impact the trajectory of a business, that to me is the game changer. And I think Equinox really paved the way in proving that that was possible and proving the impacts that it could have on brands. But now at Sapphire, right, we've taken this vision of having a strategic LP base to new heights by bringing in, owners and investors of sports franchises, entertainment groups, lifestyle brands, frankly, many of whom compete on the field and generally don't work together on anything, came into one fund because they realize the power that they have in affecting the next generation of consumers and want to maintain that market leadership position. And looking at those groups and this partnership between us and those strategic LPs offers us a vantage point, I believe, is at a higher level with our peers in the categories that we invest in. And I think that's a really special place to sit and lets us as investors think deeply about opportunity spaces. It lets us understand the difference between trends and shifts and the challenges and advantages that we have based on who this space is. And this idea that, your money can be more than money, especially today where there's so much money out there. It's really important. And it's what drew me to this platform.
I think it's certainly interesting. There's a lot of, this focus on having differentiated or strategic LPs, a lot of different folks kind of going down this path. Also true kind of in the broader sports, fitness, technology space. That's kind of one side of it. Strategic LPs who are coming together that, like you said, wouldn't normally work together. There's also this kind of evolution of operator/founder investors who are coming down that are saying we can add kind of like strategic value in terms of getting our hands dirty, especially at the early stages. And then you have folks that can, basically just stroke the check. It's, the money is an important part and they're getting into deals that way by being kind of aggressive or stepping up to the plate in terms of writing the check. Do you have to talk to founders about, hey, this is the difference that what we can bring to the table? Do you have to sell them on what it is that you're doing at Sapphire Sport? Or is it, the types of companies and founders you're looking to back understand the value that you bring to the table? And it's not as much kind of pitching or convincing them. It's just more so getting to know them and building that relationship. How do you leverage this strategic LP base, like you said, with founders?
I think in the beginning, right, Sapphire Sport's been around a little over 2 years now. And in the beginning, it was a bit more of an education process just because the model was pretty new. But at this point in time, very fortunate that the portfolio speaks for itself. I don't know if you saw the Buzzer press release go live this morning, but Buzzer raised $20 million and the headlines are, it's like Buzzer lands all the goats in a $20 million Series A. It's unbelievable. And the types of rounds that we're able to structure by bringing both our LPs into deals and the athletes that some of those LPs represent, who can really help impact outcomes for brands and founders without creating cap table nightmares for founders that are really hard to manage. And, the more we play in a very specific world, all of our founders have a really strong and close-knit community and work closely together. And it started to create a flywheel effect, which, I feel very fortunate to have joined the fund after my partners, Doug and Michael, laid all that groundwork. But we're really excited about what's to come as a result of continuing to build that momentum.
Yeah, you mentioned this piece around it's taking a lot of different forms, whether it's the celebrity investor, musician, certainly athletes, definitely within like the sports and performance space. How do you think about, I don't know that it's necessarily new, certainly different kind of celebrities or athletes have been getting, equity compensation or if not monetary compensation to partner with brands. But why are we seeing this, kind of happening? It seems like every press release is basically this company just raised a ton of money. Also, these are the kind of killers of sport or music or whatever performance entertainment that are participating in the rounds. Is it they're looking at what's happening in the broader ecosystem and saying, we want to get in on this? We can obviously add a lot of value in different ways, but maybe why now and what does that mean?
I think investing, and we're seeing this with so much happening in the public stocks, right? But investing is part of culture now. And to a certain extent, both venture capital and public markets investing are a way for you to put your money where your mouth is and talk about what you believe in. And, we have athletes and LPs proactively saying, these are categories we really care about. Help us find something authentic that we can get involved in and support. I think from a founder standpoint, it's a bit tricky because you want to take investors who can meaningfully help you achieve your objectives. And, some of these LPs and athletes are unbelievable. They're going to spend hours with you. They're going to be really devoted. But we also encourage our founders to get smart on how they're structuring those deals to make sure, they're getting a combination of smart money and the buzz or the PR or whatever else they hope to achieve by structuring those rounds together. But it puts us in a fun position. I will also say it creates more of a need for institutional knowledge. At the end of the day, I'm a VC and my job is to deliver superior returns to my investors, which is why, Sapphire Sport is part of I don't know if you know about the broader Sapphire Ventures family, but Sapphire Sport is part of the Sapphire Ventures platform, which manages over $6 billion in AUM. It's made up of a thriving growth stage enterprise software platform, a fund investment platform that's an LP and early stage VCs globally. And, there's true deep institutional tech investing knowledge here that allows us to conduct our process as such in a very sophisticated fashion and lets us punch above our weight as early stage investors. And that's something I want to hold on to, right? A lot of people want to get into investing. And if your goals are purely strategic or purely buzz, sure, that's fine. But at the end of the day, like LPs also need to deliver financial returns.
Yeah, it's certainly that's how you will be measured, and what that looks like over the lifetime of the fund, and then multiple funds. In Sapphire's case, it's has an amazing track record of having done that. As you move into the role at Sapphire Sport and you think about, the passion that you have for health and wellness and mental health, all those things, whether it's as part of the fund itself and the investing that you're doing or personally, how do you think about the impact that you want to have, right? You mentioned this piece around, well, you have to deliver returns, and that's kind of wearing the business hat, but there's also you personally sitting in that position saying like, hey, I can deploy this capital in a way that moves the needle with different companies that focus on these things that I'm passionate about. How do you balance those things, and how do you, hope that impact plays out?
I'm so glad you asked that question, because this is something I am so passionate about and talk to my partners about regularly. I think particularly for me, I became a new mom during COVID, and I had my son last June, and I was trying to figure out how to be a female investing partner with a young baby, working from home, trying to manage it all. And it's really just solidified this passion for me in helping both young investors, but also founders acknowledge that life is not work or play. It's this well-rounded vision of a happy life. And I think particularly now, we're investors in amazing founders, but they are running. And I actually have to highlight it. I got an email this morning from the founder of Buzzer. Obviously, they had a big day with all this buzz, no pun intended. And he sent us an email that asked us to pause, take a moment, and express gratitude to our loved ones that support us on a daily basis. That's what he said this morning on this day of the press release, which is arguably like the biggest day of his life. And it's just this acknowledgement that we're constantly running, and there's more to life than billion-dollar businesses. Don't get me wrong, that's my career, and I love backing the founders who are changing the future that we're going to live in, but also enjoy like living in that world, right? Don't forget about you, your health, your loved ones, and particularly when we think about investing in this category, like ultimately we're just trying to help people live happier lives. And I think that's a message that we need to share more in this industry. And this idea of just giving back and sharing some of that gratitude and appreciation that like every day we get to sit in this seat and founders get to change the world, and we get to back the founders that do so. And like, I don't take lightly what an incredible opportunity that is as an investor.
Appreciate you sharing that. An amazing kind of compelling story and just kind of personal narrative as you think about, and congrats on being a new mom, navigating all that while trying to have this impact. And this is something that, I'm just starting to understand more fully, is that transitioning from an operator and founder to also now making a number of investments, just thinking about how that multiplies the impact. We always approach things as, what can you do, the hours that I put in today, and hope those things compound. But you're only working on one thing. Now, wearing that investor hat, you're enabling and empowering and supporting all these different founders who are affecting change across all types of different people. It really accelerates things. So it is super powerful. And I think it's important to, maintain that, this isn't all that there is in terms of building that company. There also has to be the balance and everything that goes into it.
Yeah. And part of that is also backing the founders with those values, right? Like you have to pay attention to what gets rewarded, what gets promoted, what gets funded. And, by investing in the people who are going to elevate those principles and continue to spread those messages, it's the biggest way we can have change. And again, like I really don't take that lightly. And I think when we think about building our founder community, if you don't share and echo those values, it doesn't really matter to me what you're building, right? That's not how I want to spend my day.
Yeah, likewise. It a lot of times what I see is like my most glaring mistakes in them, and just think like, oh my goodness, I can't let you continue to go down this path because like I already did it and it doesn't turn out super well. So kind of saying like, I understand that it maybe feels like you want to run full speed into this and just work yourself into oblivion, but like that's not going to help you get to where you want to go. So yeah, kind of reflecting on the mistakes that I made and trying to help folks avoid that definitely stands out as you start to talk with founders who are, like you said, putting their all into this and running 1,000,000 miles an hour. One thing I'd be interested to hear your take on is you obviously you follow this closely, both from the personal standpoint, from the, hey, we have to get returns on this standpoint. But there's this other piece, which is, what are you excited about? Are there ideas that companies you hope somebody will start because you're interested in backing that? Or is there just an area that you're looking at in terms of how things are trending, opportunities and white space that you're kind of waiting for somebody to take advantage of, or maybe could point somebody in the direction of pursuing?
That's such a great question. One of my favorite exercises, and like life is busy and we're running, but I try at least once a month, I sit down and write out what I think the consumer will look like in a year. And I'm talking like really far-fetching things. Like, I think in a year, my toothbrush should probably send my tooth data to my dentist. Like, my toothbrush should probably be able to tell my dentist if I have a cavity. I know that this sounds like outlandish and kind of ridiculous, but I make a long list of those things, i.e. my AirPods should hear my emotional health. My hormones will be tracked, like my steps. And I use that to really look for areas to invest in, but also think about products that should exist that don't. And anybody who knows me, like, I have a startup idea every other day that usually comes from this exercise. I think one area in particular I've been spending a lot of time thinking about is mental health. It's something I'm very passionate personally, I think, when it pertains to children. So 75% of mental health disorders show up before age 12, according to a founder. And I think pediatric mental health or youth mental health is something we haven't seen enough innovation in the venture landscape. And obviously, mental health across the spectrum is one of the most heavily funded categories right now. And I think there's a lot of room to think about how we offer those services to youth, and hopefully how we detect and prevent mental illness at a younger age. That's an area just for me. I mean, it's such a beautiful thing as an investor to get to invest in categories where you can make a lot of money that also just matter so much. But I've been spending a lot of my time in and around there, both on the B2B side, enabling technology side, and D2C consumer platforms.
Yeah, I think that's a great one. Is it, you mentioned doing this kind of practice where you write this down. Are you putting that out anywhere? Are you publishing it? And if not, you definitely should. I think folks would be...
I can't give away all my trade secrets, Joe.
Right. You have to keep the good stuff. But even, I think it's something we go back and forth with. Obviously, we create a bunch of content and we put out as much as we can. There are some things that are off limits, and you have to keep kind of the secret sauce behind the scenes. But I think people would be really interested to hear even what you're tracking in a way that maps to future opportunities, or maybe areas that are, like we said, fads or overhyped that maybe we don't want to pursue. So definitely, if not, consider doing that.
I appreciate that. I'll think about it. That is, I will say, our LPs get this all the time.
Oh, of course. And that's this is where we're trying to navigate with conversations like this, right? And like we talked offline, there's some things we just can't talk about, right? And I think everybody totally understands that. But then there is the balance of, like, how do we open source more of this? And obviously there might be more hurdles that you would need to clear than maybe somebody like me who can put out an investment memo if I wanted to talk about why I invested in a particular company and things like that. But to the extent that there's, you have this unique insight and perspective, it's super valuable. And I think founders, especially in these areas, mental health, performance, sports, fitness, they're clamoring for it. So
I appreciate that. One of the best ways, frankly, to hear it is from the founders themselves. They're so forward thinking and they have so many ideas about how the world is changing. And sometimes I think it's just finding us all the time to sit back and have a conversation. I actually my partners will laugh, but recently I put a mandatory 2-hour meeting once a month on the calendar for no agenda. Like, we just have to talk about where the world is going. And it sounds so silly, but in this Zoom world where we're constantly running and you have no travel time between meetings, and it's just, every company is raising a Series A and then a B the next day. It's important to take that time, and it's important to think about the world. And ultimately, we're going to make better investment decisions because we have that time to think creatively.
For sure. I couldn't agree more. Kind of, I guess, changing gears a little bit as we get towards the end of the conversation, wanted to tie this back into some of the, your previous experience in the fitness space at Equinox, but also what you're seeing now. Curious, do you have a take on the future of fitness, all the different things that are happening now at person, in-home, omni-channel? Certainly Equinox has a bunch of stuff going on in that space. So there's that. Kind of, how do you think about that? And then the other piece also around these fads or trends, is any of this making us any healthier?
I hope some of it is making us healthier, at least the things that I invest in, given I'm quite vocal that my number one focus area is clinical efficacy. What I will say about the future of fitness, I think there's been a very interesting opportunity coming out of COVID, and the opportunity and openness that COVID caused in consumers are just willing to try new things, right? There's an interest in trying new things, an interest in trying more convenient things, an interest in doing things that are more fun. And the key challenge here, and I hate to beat a dead horse, but we just need to see businesses that work. At the same time as consumers are willing to try things, they're tired of trying things that don't work. Do you know how many acne creams I have tried? I literally order every one I get targeted on Instagram, and the vast majority of them do not work. So I think the consumer's getting smarter. The next generation consumer's getting smarter. They have a wealth of information at their fingertips. And when we think about the future of fitness, whether it's gamified fitness or whether it's physical recovery tools or sleep management protocols or digital biomarkers at home. I mean, I can read you psychedelics, like I'll read you every buzzword in the book. It's got to work. It's got to work. So I'm curious and eager to see the types of, whether it's credentialing organizations or how we can figure out how to help companies get clinical studies more cheaply so they don't have to raise so much capital before they even launch to prove out efficacy. There's a lot of interesting things to think about how the future of the category evolves in that regard.
Yeah, it's certainly, in addition to all the other elements that are going on, getting to that point, just does it work? I think that's why we see the consumer who is willing, like you said, whether it's the acne or the everything that you get targeted with on Instagram, it's never ending. And obviously we don't have the solution because we keep grasping at the next fad. The way that we've kind of talked about it is, and I don't know that this is happening yet, is when we're evaluating companies, it's like clinically backed, but consumer oriented. So just as like a buy-in, it has to have this element of rigorous, legitimate science back or results oriented. And right now, I think we're still in that, gray area of claims, lots of claims, but not quite like how do we across the board put it through a process that we can then measure it to know. And yeah, I'm not sure how we get there. I don't know if you have any insight on that. You mentioned creating kind of like this clinical board, but I do think it's a hurdle that is kind of hindering the broader landscape.
I'd agree with that. And I think it's different for every company. It's also part of the reason, right? I love having this LP base made up of health and human performance coaches, because if they take early interest in a business and can really validate it, whether it's with their athletes or their fans or other people within their organization, like that's a huge stamp of approval for an organization that it works. And I think that type of launch pad can really help you get off the ground in a marketplace that is highly competitive.
Yeah. Great takeaway there. And in terms of, the takeaways I hope folks walk away with, touched on a lot of great things, I think, from the younger kind of Gen Z consumer, where they're heading, what they're looking for, mental health, efficacy, and so much more. As we wrap up this conversation, where can folks learn more about Sapphire Sport, keep up with what you're working on, maybe get your updates on what the future consumer is doing and trends that they should follow? What's the best way to follow along?
Sure. We're working on our marketing strategy these days. I feel like we tend to hang out a little bit behind the scenes, but we generally publish blogs on our website about our investment theses when we invest in companies. I published one the other day I think just yesterday on why I joined Sapphire. And I'm actually publishing another one in 2 weeks on what makes an attractive health and wellness investment. So that'll be on Sapphire's website. Otherwise, we publish a lot of thought leadership behind the scenes. We're thinking now if things like podcasts make sense to help share some of the messages we share internally and with our LPs, whether that's on health and human performance or the metaverse or NFTs or cryptocurrency, how we can share some more of that thought leadership with the world. And the last thing I'll say is, anyone who's ever cold emailed me knows I generally respond at the sake of my personal time and sleep. But I always love to have conversations with interesting thought leaders, especially people publishing articles and research. So, always happy. I might regret this, but I'm generally happy to have a conversation.
Yeah, I hope people check all of that out, the website, the blogs, and, if it's really good, just send an email and keep the conversation going. But nonetheless, appreciate you making a few minutes today to share some of those insights. I know folks will find them super valuable. So I appreciate you joining us, and thanks for being here.
Absolutely. Thank you for having me.
Thanks everyone for listening to today's episode. For more from Fit Insider, visit insider.fit.co and subscribe to our weekly newsletter for insights and analysis on the business of fitness and wellness. Then, go ahead and subscribe, rate, and review the podcast. See you next time.